Hey, hello everyone. I want to talk to you about a topic today that a lot of employees have questions about. They come to me, sometimes they're new employees, sometimes they're employees that been working for us for a while. And the question that they have is, hey Greg, I have a old 401k, right? It's from an old job, the money's still there, and I don't know what to do with it. Should I roll it over? Now that I'm a federal employee, should I roll it over into the TSP? What are my other options? And so today I want to talk to you about how those things work. What are some of the benefits and some options, benefits, and then also some of the things to take in consideration when you're making those decisions. Okay? So let's go and get started. Now, first of all, let's look at your old 401k. Some of you, you worked for universities before, other hospitals and all that. And those companies, they usually hire another company, right? What's called a custodian, to manage their 401k. Okay, and based on some of the employees that I've worked with, most of those old 401ks, at very least, they have a traditional side of their 401k. So it's money that has not been taxed yet, right? They've got the tax deductions on it, and now they want to do something with it, right? But what I would also make you pay attention is some companies also, their 401k do have a Roth side of their bucket as well. We want to make sure if we know, do they have traditional and Roth, and how much money is in each one of those sides of those buckets. So it's one of the things that we want to know about before we start to make this decision, okay? Now, you have some options, okay? Some of the options is to take your old 401k and you can roll it into your new 401k here with the federal government, right? Our thrift savings plan, which, by the way, if you haven't seen some of our other classes, the TSP, the thrift savings plan, is just our brand name for a 401k account. That's exactly what it is. Okay? So you're going from your old employer's plan to now your new employer's plan. So that's something you can do. Another option you have is you can open what are called IRAs, right? These are things that you open, they're not connected to your employer. It's something you just do as a citizen. But the only thing is, whereas a 401k is one bucket with two sides, these are two individual buckets. We have a traditional IRA, which IRA stands for Individual Retirement Arrangement. Most of us just use the term Individual Retirement Account because that's what they really are. But we have a traditional IRA bucket. Now, I would always encourage you to also open a second account, which is a Roth IRA. Okay? And I'll kind of tell you how those things work. Now, where do you open these? You can open them through your bank or your credit union. I'm not a really big fan of that. The third place is where I open those accounts, and the people I love is through some type of brokerage company, right? So we have accounts we have good experience with Fidelity, Schwab, Vanguard. All of those, I can't make an endorsement for any one of them. Those are the ones we use. But I encourage you to open actually both of them, okay? So let's talk about that. We have two major options. And what I want to do is I want to show you how the money can flow. And when it flows a certain way, how does that work? When is the money taxable? What happens to it? And then we'll also go back and talk about some of the pros and cons of each one of those accounts. Okay? So let's start there. Now, in your old IRA, let's start with traditional because most of them guarantee you have a traditional. You can roll this money over into the TSP. Okay? And this is the biggest thing. We want to make sure when we're talking to people about this, when we call the TSP folks, when we call your old 401k people, we want to use the term rollover. What we do not want to do is take a distribution or pull the cash and then try to dump it here. We don't want to do that because that creates a taxable event and we're not ready to do all that yet. Okay? The term is rollover. Matter of fact, when you move the money, one of the options, it unfortunately happens, some old 401k, I don't know if it's because they're bitter, because they're losing your business, or it's just the way they do things, they won't make a direct rollover into a new 401k. They'll say, oh no, we'll send you the check. You can mail the check to the new 401k people. Do not cash that check, right? As soon as you get it, sign it off and send it to the TSP folks so that money doesn't sit in your hands for very long. Okay, so if you want to do this option, let me show you how it's going to work. Now, the traditional money, what's going to happen is the traditional money will flow down to the traditional side of the TSP bucket, okay? No taxes need to be paid at that time because you're going from a traditional 401k to another traditional 401k, okay? If you have Roth money, right? If you have Roth money in here, then okay, then you can roll that to the Roth side of the TSP, okay? That's gonna be rolled over here. Now, I've been talking to a few folks lately in the past year. I've helped them do some rollovers. They said once all the paperwork is done and the TSP, what you do is you send the money, the paperwork to the TSP. The TSP actually pulls the money from your old account. So essentially, they pull the money. Part of the paperwork you indicate is to close the old account. Please close that account. So essentially, I tell them the expression they use is the TSP is going to break up for you, break up with them for you, right? They'll pull the cash, close the account, and now all that money will be in the TSP account cash. Once that money lands in here cash, they're telling me that the wait time is around 7 business days, okay? From the time they file the paperwork to the cash is pulled and the cash is sitting in that account. From there, once it's sitting cash, they're telling me it takes an additional 4 days, 4 business days, to now get that cash and start buying the investments you want, right? The C fund, the I fund, the L funds, whatever mixture you like, that's how long it's taking. So that's something that you can do, right? So that's one option, okay? Now, if you have traditional money in this 401k and you want to say, hey, you know what? I don't have any money in Roth. I'm just learning about it, but it's something I want to do. Can you move traditional money to the Roth IRA side of the bucket over here? Pay the taxes? I want you to talk to the TSP. Give them a call. I do not recommend that, right? I do not recommend that just because you're crossing two different accounts. Now you're going from 2 different sides of the bucket. I don't want that screwing up your taxes. There's other ways to put money in the Roth to get the balance that you like. So that's not something I would personally recommend or do with any of my family or myself. But yeah, once that money drops in here, then you can do that, okay? So that's one option. Contact the TSP. Actually, on the TSP website, the TSP website's pretty updated these days. There is a process to do that electronically. You'll fill out the information. You might still have to call these guys to get like your proper account number and the routing number from your old custodian, and that's okay. But then when you move the money there, again, the cash will get dumped in, and then after that, you can get that cash and start buying the investment funds that you like to buy, okay? And that's one of the options. Now, if I can move forward, let me show you the other option here, okay? So the other option you have is you have an old 401k and you can roll it into your individual IRAs, okay? And the way I kind of think about this is, you know, these accounts are connected to work. So the way I look at it is, let's say you have a file cabinet at work with all your work documents, like your performance appraisals, your pay stubs and all that, and there's a safe place you store it at work. The way I look at IRAs, these are personal. Kind of like you taking those personal files you have at work and taking them home and keeping them, then you're safe at home, right? It's okay to have, you know, if I'm investing and my company's giving me a match, I'll keep some paperwork at work. But if I'm moving from job to job over the span of my career, I eventually want to leave that job and bring that personal paperwork home with me. Something that I can control completely no matter who I work for to the day I die. And that's kind of why I think that's one of the benefits of this option, right? But again, when you do that rollover, you're going to be doing a rollover from a traditional, you can do this, to that traditional IRA, Roth to a Roth IRA, and you can move it there. Again, remember, these are 2 separate accounts. I suggest you keep them with the same custodian or brokerage company, but can you have them in different places? Yes, you can, okay? I don't recommend that, but you can certainly do that. And then again, because traditional money is moving into another traditional retirement account, it is not a taxable event. The Roth money moving to the Roth IRA, that's not a taxable event. And then the money could stay there. And then from there, once that cash gets deposited, then you could buy your investment funds or your stocks or whatever. Maybe you're saving cash, you could leave it in cash. But you could do that there, all right? One of the other things you can do, at this point in time, yes, you are able to roll this traditional 401k money into the Roth IRA. Can you do that? The answer is yes. Okay. But the same reason why I didn't recommend it down here, I don't recommend it here. It complexes things. I like to see large amounts of money move one step at a time. It helps you with tracking. It helps all these custodians not get things confused. And then come tax time, it makes things a little bit easier for your accountant and minimizes the risk of screw ups, right? So that's why I recommend that, okay? So let's say you move your money here, right? Any amount of money to traditional, your money moves here. From there, once that money settles in the account, I don't know how many days that's gonna take, but let the money in the cash settle in that account. From there, you could buy investments, okay? So let's say we do that. Now, when you put the money in traditional IRA, some folks also, another thing they could do after the cash settles, right? Then if they want to move some money from the traditional to Roth, you can do that. That's called a Roth conversion, okay? You can't do it the other way because you've already paid income taxes on this money, right? But you can do from traditional IRA. Some people call that a backdoor Roth IRA for my high earners, or even if you're not a high earner, anyone could do a Roth conversion, right? So then you can move money from here down to here. Now let me get rid of some of this stuff so it just hopefully eases a little bit confusing. This is some old business we took care of. All right, so we took care of, that's old business, that's done. Now we have money in our traditional IRA, or maybe a little bit of money here, a little bit of money here. From there, you might want to say, hey, I want to put some money in Roth, I want to convert it. By the way, you could do this at any time, right? You don't have to be 59 and a half years old, you don't have to be a retirement age. You could do this at any time, and then you do the Roth conversion. I recommend it doing maybe once a year to keep things simple. But yeah, you can do that. Now you cannot move money this way, all right? Again, the reason why is the money in the Roth IRA, you've already paid income taxes on that money, and therefore you can't go back and get a tax deduction if you move it in the traditional IRA. We don't want to do that, okay? So we want to do this. So if you want to keep the money there, keep it there, that's fine. But if you do want to do some Roth conversions, you can do it at that time. Okay, so that's kind of what I recommend. And I'll talk more about this transaction here before we get into some of that. But guys, let me kind of dive into some of the advantages of each one of these options, right? So you have one option here, old 401k to new 401k, old 401k into a traditional IRA or into a Roth IRA, okay? So these are the advantages of these IRAs, these outside IRAs. First of all, one of the things we want to do is we don't just want to move it into any IRA company because they got great commercials or you saw them on social media or because your coworker has it and they like the app on the phone. Those are really not the highest priorities when you're trying to find a company to open up an IRA. First of all, we want them reputable. Reputable means they're in good standing, they've been around for generations, they have a good reputation of taking care of their customers, not just in good times, but in bad times. And I gave you a few names, a few of the folks that I do business with in investing, right? Fidelity, Schwab, Vanguard. So yeah, and those companies, the proper term for them is called an IRA custodian. So don't get hung up on the term. It really is the company that's managing the IRAs, okay? Now, one of the other advantages is if you find a good and reputable company is low cost accounts. Somebody is working to manage those accounts, to make sure those accounts make sure they're active, to make sure that things are moving properly, if money is moving around. Nobody works for free. And one of the things I want to mention is do not equate in the world of finances and in the world of investing, low cost equaling low quality, okay? I know in some other industries out there, whether you're buying clothing, whether you're getting treatments, whether you're buying a vehicle, low cost usually equates to low quality. That's not the case. So that's one of the things we need to get past when we start thinking about our money and investing, right? So we want to find low cost accounts. Also, low cost investment funds. The things that we buy, one of the things that is very famous about the TSP is they are both low cost and low investment funds, right? So the cost to maintain those funds, not to say they're not performing, just the people who manage those funds, they don't charge a lot in fees, right? So that's one of the things that we can do out here, okay? low cost, low investment funds. And those custodians, those ones I mentioned earlier, are famous for that, right? Now, this is the thing. I just talked to you about this Roth conversion. That's this point right here. When you do this, if you do now, later, you want to make Roth conversions, when you do this configuration, you could do it at your pace or your timing. Well, what do I mean that by your pace? When you move money from a traditional IRA down to a Roth IRA, that is a taxable event. You're going to pay the income taxes on that money, not capital gains, but income tax on that money. And once that money goes here, once you invest it, and then investment grows, you will never pay taxes on that money again. And a lot of you are starting to think about that and saying, hey, yes, I'd rather pay taxes now because I believe they're lower now than they will be in the future. But you can do it at your pace. You could do it $10,000 at a time, $5,000 at a time, right? You could do it in whatever, because hey, if you want to move 10,000, you're like, hey, I have enough money to pay the income taxes on 10,000. Let's go ahead and do it. But you do it at your pace. Okay? Second thing, you could do it at the amounts that you want. Right? Again, I mentioned earlier, you could do it 5,000 at a time, 10,000. Some of you have, 401ks that go here, they're worth 300,000. So again, you could do it at the amounts that you want. And the amounts are important too, because when you talk to your accountant, sometimes you want to convert as much money as you can, staying in a certain tax bracket level before going over into the next tax bracket level. So it's something that you and your accountant can have a conversation about. Right? So you decide the amounts. And then the next thing is timing. Some people could say, hey, right now I'm full-time, me and my spouse are full-time, we're both earning really good salaries. I really rather keep the money in traditional so we can get the tax break because we're really in a high tax bracket right now. But next year, I'm going part-time or my wife is retiring. Our tax brackets are gonna go down because our overall taxable income is going down. So if I'm timing it, maybe I don't do the Roth conversion this year. Maybe I do it next year, right? So you have that discretion when you have the money in that account. And the reason why that's important, just to compare, guys, once your money is in one of these sides of the bucket in the 401k, once that money's in, you cannot move it. The only time you can move it is when you're about to retire after 59 and a half years old, or you're ready to retire, and then now you want to roll this money over into these accounts. Then you can go from traditional to Roth, right? So that's when you'll pay the taxes. But when you have these two accounts on the outside, you can do it at any time, right? So that's one of the advantages, okay? Another thing I would mention is when you have money in these retirement accounts, and this is just a benefit for retirement accounts in general, that cash is protected from creditors or during in instances of bankruptcy. I didn't know if you guys knew that, so I just wanted to put that on there because it's not really discussed a lot online or retirement brochures and whatnot. So that's one of the benefits. But I think this one is the big one in terms of these IRAs. In the TSP, you can get low-cost accounts, low-cost investment funds. They are a very reputable custodian right here in the TSP. So the big advantage for this one is this right here, I think. Then at the same time, also, you don't have to keep changing these every time you move from employer to employer over the span of your career. This is kind of that home-based retirement account, like keeping your cash and your sensitive files in that home safe. It could be with you to the day you die. Matter of fact, you could actually even give it to your beneficiaries after you die. Okay. So let's go down now to the 401k. 401k to old 401k to new 401k. One of the benefits of that is you consolidate accounts, right? You consolidate accounts. Through the federal government, this is their 401k, you have an account, right? And if you have these two on the outside, now you have 3 accounts. So if consolidating accounts is a big benefit for you, that's one of the great reasons why to put in the TSP. Also, the loan provision, okay? The loan provision. If, let's say this person here has $50,000 and they roll it into traditional or Roth IRAs, you cannot take loans from this, okay? You cannot take loans. But let's say you put 50,000 in here, or let's say you put, to keep numbers round, let's say we put $100,000 right? We rolled it over from the old 401k to the new 401k. The rules of the TSP is you could take a loan on that money now up to 50% of your balance, but no more than $50,000. And that's why I strategically used 100K. If I put 100K in here, the maximum amount I can take in a loan is $50,000. Okay? If I only rolled in, for example, let's say 80,000, well then the 50% limit would be, oh, I have $80,000 balance, I could take a $40,000 loan, right? So that loan provision is good. Now, whether taking a loan from your 401k is a good idea or a bad idea, that's another video and another conversation for another day. I have my opinions about that, but I do want to just educate you as far as your options. So I just want to make sure you know that. And another thing, you notice I also, again, this one is also protected from creditors and during bankruptcy. And even though maybe not differentiate, I thought this might be a nice teachable moment to talk about that, so that, yeah, these retirement accounts are also protected from bankruptcy. So guys, those are some of the options you have. If you are a person who's creeping into retirement and you're wondering what to do with your TSP once you retire, yes, you can now start rolling that money into these outside IRAs if you want, or you can just keep it in the TSP, right? And if you didn't know this, this is just maybe added information. If you want to take the money straight out of the TSP and start spending it for your monthly living expenses, then you can start doing that, right? You could do that in retirement. You could take it out. And by the way, those are called distributions. You could take those distributions in monthly increments, quarterly increments, annual increments, or take the whole lump sum out. You make the decision. So that's another one of the features of the TSP that you could use. But yeah, guys, I just want to compare the two, and then you can make a decision based on what's going on in your life. If you want to talk more about, hey, what your specific situation is, and maybe you and I can explore some ideas or options or the pros and cons to these accounts versus your specific situation, then send me a message. Most of you know how to reach me on the global. And then we can kind of go over that. But yeah, that's just some of the things to do there. And does it seem like a lot of it's confusing? I do think once you kind of get the process going, you talk to some of the folks at the TSP on the process, or you talk to some of the people at your IRA custodian about it, they can help you with it. You can talk to me, and I've actually helped people actually do this click by click. And you can get it going. But I hope so this shows you some of the pros, the cons, advantages, disadvantages about those accounts. So you could take a look at that. By the way, one of the things I will mention in closing, one of the reasons why I do not like keeping money in old 401ks is because, again, this 401k is connected to your old employer. And the reason why that is even though they're with a good custodian, let's say a Vanguard or Fidelity is managing this account, and you like them and they're a good custodian, the thing is you are not connected to your employer. You're not getting the all-employee emails. You're not getting the notifications. You don't know if they're raising the fees. You don't know if they're reducing the amount of investment funds options you have. You don't know if they're going bankrupt. I mean, you just don't know. So I don't like that. I don't like not knowing what's going on. When it's in the TSP and you're working for the federal government, you're getting the news, right? You're getting the news of what's going on. You're paying attention. And if your money's out here because it's a personal account, well, you should be paying attention to your personal accounts. So that's what I'm just saying. I don't want those things to fall out of sight, out of mind with old employers. So my recommendation is whether you choose this option or this option, do something, right? Move that money forward so that way it's on your radar and it's not forgotten. But yeah. So guys, with that said, I'm Greg. I appreciate your time and attention. I hope this information was helpful for you, right? Have a good day. Bye.